Hello and welcome to the channel. I'm CryptoDD and I do all things crypto. Please take the time to like and subscribe if you'd like to see more deep dives and analysis of different cryptocurrencies. Or you can check out my other videos. As always, this video is meant for informational and educational purposes only. It is not meant to be investing or financial advice. Please do your own research and analysis before investing in any cryptocurrency seen here. With that, let's get to the deep dive. In this video, we'll be doing an in-depth analysis on Ethereum, the world's second largest cryptocurrency by market cap as of the time of this recording. We'll take a deep dive into Ethereum and its underlying technology. We'll explore how Ethereum is different from Bitcoin, Ethereum's history and background, how Ethereum works, ETH's use cases, and finally, whether or not we should consider investing into ETH. So, let's get started. The first step in understanding any cryptocurrency is understanding what the blockchain is. Blockchain is a decentralized digital ledger that records transactions across a network of computers. It is a distributed database that maintains a continuously growing list of records called blocks, which are linked and secured using cryptography. Each block contains a timestamp and a link to the previous block, forming a chain of blocks, hence the name blockchain. In a blockchain network, transactions are grouped together and then added to an existing chain of blocks. Once a block is added to the blockchain, the data in that block cannot be altered, making the blockchain highly secure and transparent. Blockchains can be used for various applications, such as a digital currency, supply chain management, and voting systems, because of its decentralized and tamper-proof nature. The most popular and well-known application of blockchain technology is Bitcoin, but more applications have continued to be utilized over time, hence why we have so many different types of blockchains. Blockchain technology is considered to be revolutionary because it has the potential to eliminate intermediaries, increase transparency and trust, and reduce costs for various industries. Bitcoin and Ethereum are both decentralized digital currencies, but they have some key differences. Bitcoin is primarily used as a store of value and means of payments, while Ethereum is used to build decentralized applications and smart contracts. Ethereum's blockchain also supports the execution of programmable code, making it more flexible than Bitcoin's blockchain. Additionally, the supply of Ethereum is not finite. This is a major difference from Bitcoin, which has a maximum supply of 21 million. Lastly, Ethereum's block time is also faster than Bitcoin's, allowing for faster confirmation of transactions. We'll go more in depth on some of the different use cases for Ethereum later on in the video. Ethereum has a rich history. Let's take a look at how it was developed and its journey till now. Ethereum was first proposed in 2013 by Vitalik Buterin, a young programmer and cryptocurrency enthusiast. He recognized the limitations of existing blockchain technology and proposed a new platform that would be more versatile and powerful. Buterin initially published a white paper outlining the Ethereum concept, and a crowdfunding campaign was launched in 2014 to raise funds for the development of the platform. The Ethereum network officially launched on July 30th, 2015, with its first version, known as Frontier. This was a basic version of the Ethereum platform that allowed developers to begin experimenting with building decentralized applications on the network. After Frontier, Ethereum has had several development phases and releases like Homestead, Metropolis, and Serenity. The Ethereum platform has since undergone several major upgrades, including the introduction of a new programming language called Solidity, which is used to write smart contracts on the network. The most recent upgrade, Serenity, also includes a long-planned change from a proof-of-work consensus algorithm to a proof-of-stake algorithm, which aims to increase the scalability and security of the network. We'll go over what the difference is between proof-of-work and proof-of-stake here shortly. Ethereum is one of the most active and successful blockchain projects in the world, with a large and passionate community of developers, users, and investors. It has played a key role in the development of the broader blockchain ecosystem, and it continues to be a leading platform for decentralized applications and smart contracts. The Ethereum blockchain stores the entire history of all smart contracts and decentralized apps, or dApps or dApps, as well as the balance of every Ethereum address. Every time a smart contract or decentralized app is executed, the entire network must reach a consensus on the new state of the blockchain. Users can interact with smart contracts and decentralized apps on the Ethereum network by sending transactions to the network. These transactions are broadcast to every node on the network, and they are validated and added to a block by miners or stakers. Once a block is added to the blockchain, the new state of the smart contract or decentralized app is stored on the blockchain, and it can be read and interacted with by anyone on the network. Ethereum is a decentralized platform that enables the creation of smart contracts and decentralized applications. These smart contracts are self-executing contracts with the terms of the agreements between buyer and seller being directly written into the lines of code. Ethereum smart contracts are written in a programming language called Solidity, which is similar to JavaScript. Ethereum originally used a consensus algorithm called Proof of Work, also known as POW, until they recently switched to Proof of Stake, or POS. We'll go over the differences between those two next. To understand the difference between the two, let's first learn what consensus is on the blockchain. Consensus is a mechanism used to ensure there is universal agreement that the data and transactions on the blockchain are genuine and widely recognized across the blockchain. Without consensus, the blockchain would be utterly useless. Ethereum originally used a consensus algorithm called Proof of Work to validate transactions and add new blocks to the blockchain. In Proof of Work, miners use specialized computer hardware to solve complex mathematical puzzles in order to validate transactions and create new blocks. The first miner to solve the puzzle gets to add the next block to the blockchain and is rewarded with a block reward, which is typically a certain amount of the cryptocurrency that the blockchain is based on. This process is called mining. The mining process is computational and power intensive, so it requires specialized hardware and a lot of energy. Because of this, Proof of Work consensus algorithms are considered energy intensive and expensive. Because of this, the Ethereum network moved from a Proof of Work consensus mechanism to a Proof of Stake mechanism. In Proof of Stake, the validation of transactions and creation of new blocks is done through a different mechanism called staking. Instead of miners, validators are selected based on the number of coins they hold and stake in the network. The more coins a validator has staked, the higher their chances of being selected to validate a block. After the merge, the majority of Ethereum is created this way. When a validator is selected, they put up their staked coins as a form of collateral, and if they validate a block correctly, they get a block reward. This mechanism reduces the need for computational power and energy consumption. Proof of Stake is often considered more environmentally friendly, as well as more resistant to centralization. The Ethereum virtual machine is a software environment that runs on the Ethereum blockchain. It is responsible for executing the code of smart contracts and dApps on the Ethereum network. The EVM is a virtual machine because it provides a virtual environment that runs on top of the real hardware of the nodes in the Ethereum network. This virtual environment is designed to be fully self-contained and self-sufficient, with its own instruction set, memory, and clock. This allows developers to write code that runs on the EVM without having to worry about the underlying hardware or operating system. The EVM is a stack-based machine, which means that it uses a stack to store data and execute instructions. Smart contracts and dApps written in Solidity are compiled into bytecode, which can be understood and executed by the EVM. When a contract is executed, its bytecode is loaded into the EVM, and the EVM begins executing the instructions in the bytecode one by one. The EVM is designed to be completely sandboxed from the rest of the network, meaning that it is completely isolated from the outside world. This ensures that contracts running on the EVM cannot interfere with or corrupt the data or executions of the other contracts. It also ensures that the execution of contracts is deterministic, which means that the outcome of the contract will be the same regardless of where or when it is executed. This is an important feature of the security and reliability of smart contracts and decentralized applications on Ethereum. Ethereum, like most blockchain networks, charges transaction fees in the form of gas to help pay for the resources needed to execute smart contracts and process transactions. The gas fees are paid in Ether, the native cryptocurrency of the Ethereum network. The reason for the existence of gas fees is because executing smart contracts and processing transactions on the Ethereum network requires computational power and storage, which are provided by the nodes that make up the network. Each operation within a smart contract, each transaction, and every contract deployment requires a certain amount of computational effort and hence gas. Gas is a way of pricing the computational effort required to execute a contract and process a transaction. The more complex and data-intensive a contract or transaction is, the more gas it will require. When a user submits a transaction or smart contract to the network, they include a gas limit, which specifies the maximum amount of gas they are willing to pay for the operation. Miners are free to include transactions and contracts that offer the most gas fees in their blocks, as they are incentivized by the fees they earn. Gas fees can be influenced by the overall demand on the network, meaning in times of high demand, users will have to pay more in gas fees to have their transactions processed. Additionally, since the Ethereum network has moved from a proof-of-work consensus mechanism to a proof-of-stake mechanism, this should reduce the need for gas as the computational power and energy requirements will be lower. Next, let's go into Ethereum's main use cases. Because Ethereum is a decentralized platform that enables the creation of smart contracts and decentralized applications, it has a wide range of use cases. Some of the most common use cases for Ethereum include: first, decentralized finance, or DeFi. Ethereum is being used to create a wide range of decentralized financial applications, such as lending and borrowing platforms, stablecoins, and prediction markets. These applications are built on smart contracts that enable trustless and transparent financial transactions. 2. Tokenization. Ethereum enables the creation of custom tokens, also called ERC20 tokens, which can represent assets like real estate, artwork, or even company shares. These tokens can be traded on decentralized exchanges and can enable new forms of fundraising, like initial coin offerings, or ICOs. 3. Supply chain management. Smart contracts can be used to create tamper-proof and transparent record-keeping systems for supply chains, which can help improve efficiency, reduce costs, and increase trust among stakeholders. Fourth, gaming. Ethereum can be used to create decentralized and provably fair gaming experiences, with smart contracts used to generate random numbers and ensure fair outcomes. 5. Identity. Ethereum can be used to create decentralized identity systems, which can give individuals greater control over their personal data and make it harder for their data to be stolen or misused. 6. IoT, or Internet of Things. Ethereum can be used to create decentralized networks of Internet of Things devices that can securely communicate and process transactions with one another, thus increasing their potential use cases. These are just a few examples of the many different use cases for Ethereum. It is a versatile platform that has the potential to disrupt many different industries by providing trustless and transparent systems for recording and executing transactions. The bull case for Ethereum refers to arguments and reasons for why the price of Ethereum is expected to increase in the future. Some of the key points of the bull case for Ethereum include: increased adoption of decentralized applications and smart contracts. As more businesses and organizations begin to adopt Ethereum's smart contract technology, the demand for Ether, the cryptocurrency used to pay for gas fees on the Ethereum network, is expected to increase. 2. Advancements in the Ethereum protocol. Ethereum's development team is working on several significant updates to the protocol. A recent example is the move from proof-of-work to proof-of-stake consensus algorithm. This could lead to improvements in the scalability, security, and overall usability of the network, which could make it more attractive to developers, users, and investors. 3. DeFi, or decentralized finance. Decentralized finance applications on the ETH network have been growing in popularity. This includes lending and borrowing platforms, stablecoins, and prediction markets. This trend is expected to continue, which could drive more demand for Ethereum. 4. Growing institutional interest. There have been increasing signs of institutional interest in Ethereum, with large investment firms, banks, and asset managers exploring ways to invest in the cryptocurrency. 5. Growing awareness and understanding of Ethereum's capabilities. The understanding of Ethereum's potential as an open-source platform for decentralized applications and smart contracts is increasing. As more people become aware of its capabilities, the demand for Ether is also likely to increase. 6. Growing ecosystem. Ethereum has a large and active developer community, with many dApps and protocols being built on top of it. This could make the Ethereum ecosystem more valuable over time as it continues to grow. It is worth mentioning that the cryptocurrency market is highly speculative and volatile, so it is important to do your own research and be aware of the risks before investing in any cryptocurrency, including Ethereum. The bear case for Ethereum refers to the arguments and reasons for why the price of ETH is expected to decrease in the future. Some of the key points of the bear case for Ethereum include: 1. Lack of scalability. Ethereum currently faces scalability issues as the number of transactions that can be processed per second on the network is limited. This can cause delays and increased transaction fees during periods of high demand. Until this issue is addressed, it could limit the growth of the Ethereum ecosystem and make it less attractive to users and developers. 2. Increased competition from other blockchain platforms. Ethereum faces competition from other blockchain platforms, such as Algorand and Solana, that also offer smart contract functionality and are working to address scalability issues. 3. Uncertainty surrounding future regulations. Governments around the world are considering regulations for cryptocurrencies and initial coin offerings, which could negatively affect the value of Ethereum. 4. High volatility. The cryptocurrency market is highly speculative and volatile, and the value of Ethereum can fluctuate significantly in a short period of time, making it a risky investment. 5. Security vulnerabilities. As smart contracts and dApps built on Ethereum can contain bugs or security vulnerabilities, and if exploited, that could lead to the loss of funds, and also smart contracts and dApps being relatively new technology, it could be some time before the security issues are fully understood and addressed. 6. Lack of mainstream acceptance. While Ethereum has been gaining acceptance among developers and early adopters, it has yet to achieve widespread acceptance among the general public and traditional institutions. This could limit its long-term potential. It is worth noting that the bear case for Ethereum, as with any investment, is not without its counterparts, and there are many potential catalysts for growth for Ethereum. It's important to evaluate the risks and potential reward when considering investing in Ethereum or any other assets. It is important to do your own research and to make your own decision regarding investments, including Ethereum. In general, investing in cryptocurrencies like Ethereum is considered a high-risk investment due to the volatility and speculative nature of the market. Before investing, you should consider your own risk tolerance and investment goals. You should also research the technology behind Ethereum and its potential use cases, as well as the broader cryptocurrency market and regulatory environment. It is important to consider that the future of Ethereum is uncertain. Its value can be affected by a variety of factors, from technology advancements and improvements to the Ethereum protocol to increased adoptions of decentralized applications and smart contracts. It's also important to diversify your portfolio and not to invest more than you can afford to lose. It is always advisable to consult a financial advisor or a financial professional before making any investments. In conclusion, Ethereum is a powerful platform for building decentralized applications and powering smart contracts. Its potential for innovation and disruption is significant. It's one to watch in the coming years. If you're interested in learning more about Ethereum or even building your own dApp, there are plenty of resources available online to get you started. Thank you for watching our video on the basics of Ethereum. We hope you have a better understanding of what Ethereum is and how it works. Remember to always conduct your own research before investing in any form of currency. Make sure to subscribe to the channel and like the video for more crypto deep dives, news, analysis, and more. Until then, Crypto DD out.